Hello, I'm Martin Lewis from MoneySavingExpert.com. Thank you so much for inviting me to the Manchester Financial Inclusion Conference. Huge apologies that I can't be there in person because this is a subject very close to my heart, and I am indeed a mank, as you'll tell from the flat vowels if you listen carefully as I go through it. Money problems and mental health problems are a marriage made in hell. Just two simple stats that prove that. Number one, if you have mental health problems, you've a 49% chance of having had debt crisis. That's 5 times more than everybody else. Number two, the treatment time for clinical depression is said to be exacerbated by an extra 18 months for people who have financial problems at the same time. The two feed off each other. This is the reason why I set up the Money and Mental Health Policy Institute last year, being run by the brilliant Polly Mackenzie. And if you have any ideas that can feed into that, our job is to try not to fix the problem, we'll never fix the problem, and not even to start helping people who have severe debts and money problems get out of the mire, because actually the financial services industry is doing quite well on that. It's about looking at clever forms of prevention. And this isn't easy. Because what we don't want to do is say that somebody who has a transitory mental health problem should be disenfranchised from borrowing. We still want them to be able to get a mortgage. We still, if you like, want them to be able to get a credit card when it's appropriate so they can mess up like everybody else. What we don't want to happen is that mental health becomes a deliberate and contributing factor to their financial problems, as is so likely. And the debilitation from a mental health problems, from mental illness, is actually in some ways much more pressing than physical illness. It's why I'm so much in favour of parity between mental and physical health treatment. Picture it. If I broke my leg tonight, I'd go straight to A&E, I'd be put in a cast, I may not be able to work the next week. Well, it's not I'm in a lucky situation, but somebody who doesn't run an entity like I do, I'd call up, get on the phone, I'd tell my bosses I'd broken my leg, I'd still be able to deal with my finances, contact my bank when I twiddle my thumb, and then I'd go back to work and everything would be okay, hopefully. If I had a mental health breakdown tonight, well, first of all, there's no A&E. It would be 10 weeks possibly before I had any treatment. During that time, I may find myself unable to communicate with people suffering from deep anxiety, not even able to call up my work and tell them that I'm having a problem because I don't want to admit it, or I'm too scared to do it, or that's part of my mental health condition. They might lose my job on the back of it because I've just not turned up. At the same time, many people are totally unable to deal with their bills when that happens. They can't cope with the stress that brings. Some go out and spend as a form of trying to get rid of whatever their possibilities going on. Bipolar, certainly, depression brings that on too. So after that 10 weeks of not working and having had terrible financial management because I'm no longer in control of my own decision-making ability, even once things start to get better, there has likely been a catastrophic impact on my finances. And this is why we have to start looking at it. It's not about disenfranchising people, it's about helping people when they're well to protect themselves from themselves when they're not well. Because some mental health conditions are transitory. And what's fascinating is the financial services institutions, they're set up to prevent fraud. They're set up to prevent somebody external trying to mess up your money. But we don't have any real way of helping somebody stop messing up their own money. And that's the type of thing that we're looking at. And so we're always open and looking for more ideas, and do get in touch with the Policy Institute and feed them through to Polly. Of course, change takes a long time. And meanwhile, there is a change of attitude that's necessary. Thankfully, the stigma over mental health has diminished substantially over the last 5 to 10 years. People are more willing to talk about it. We're not fully there yet. Many people still wouldn't tell their employer, they still wouldn't declare it to their bank. But we are getting somewhere along those lines. And equally, the understanding that debt is a big problem has become much more apparent in the last 10 years. My issue is that the two together are a potent mix of lack of communication. You know, people will talk about sex and politics and religion these days, but you try getting someone to say, actually, we're having money problems and we can't keep up with the Joneses. That's an issue. So open communication and conferences like this one that start to really focus and understand people are having those problems are at a key. I know you're going to come up with lots of clever things, but merely the fact that you're having the discussion and that we all go out there into our communities in our various roles and start talking about these things as if they're open and obvious Mental health problems affect 1 in 4 people. It is a major financial issue. It's not something niche that needs to be kept in the drawer. No more than maternity is a niche issue. People get pregnant, it affects their income. It also affects whether they can work for a period of time, and those are financial issues we need to deal with. People have mental health problems. It affects their income. It can affect how they deal with their money. We need to deal with it. We need to not make it special. We need to make it ordinary in a good way, an ordinary part of the life that many people face, and that's the way that we start to deal with it. I hope I haven't gabbled on a little bit too long, but this is something that's really important to me, and I hope to you as well.